Hey y'all, Zach McDonald, your real estate agent with Real Property Associates, and today we're going to talk about the Fed increasing rates and how that impacts the housing market. Last week, King 5 called me on Thursday around 1 o'clock. I called him back about an hour later, and it was already too late to get the interview, but they wanted to talk about what's going on with the housing market, what's happening to mortgage interest rates and affordability, and all tied around the Fed raising rates again. So this is the second consecutive 0.75% increase in the prime rate and fourth increase in the last 5 months. And I think in people's minds, they're really thinking through, okay, well, the Federal Reserve's raising the rates. How does that affect the housing market? Why the housing market seems to be kind of slowing down all at the same time. And I think the big thing here to remember is that all of this is tied around inflation. And my man Dan Keller made a great video about this, titled something like, how does this impact the Seattle housing market? It's going to be similar to mine, so I guess I'm going to title steal. But I think the idea here is that the Federal Reserve is trying to slow down inflation, right? That's the fear in the economy right now. The stock market's been having a rough year. Interest rates have been going up. And all of that's tied around the fear in the market, and the fears, a lot of it being around inflation. And so the increase in the Fed funds rate is really geared towards slowing down inflation. That's going to be consumer spending, right? Credit cards, auto loans, things like that. But that does not have a direct impact on mortgage rates or the housing market itself. Maybe you could say that people's personal budget's a little bit tighter, so they're not going to spend money in the housing market. But I think the biggest impact or effect that the increase in rates can have on the housing market is purely fear, right? Again, if there's no direct correlation, then the indirect correlation might be fear. And that's the idea with raising rates, is to slow down spending. And if spending slows down, the economy slows down, we go into a recession, and then once we hit a recession, what do? Lower the rates, right? Make spending a little bit more enticing. So the government's trying to put a seatbelt, or not even a seatbelt, they're trying to pull the emergency brake, right? Which is this rate to slow things down, and the train just really isn't wanting to slow down. So they're going to keep trying to pull it, maybe break the tracks at some point. That's a scary analogy. But right now, we're in a position where we saw mortgage rates go down. So really, since the last 0.75% jump in rates, mortgage rates have stabilized. Mortgage rates were climbing pretty rapidly. Even a month and a half ago, I went on a hike. I summited Mount Baker, and I was gone for one business day. And I come back on Monday, and my team's like, "Did you hear what happened?" I'm like, "What happened?" They're like, "Rates jumped like 1%." And they're like, "What?" And we were up into the low to mid sixes all of a sudden, just like that. And I think what we've seen recently is rates have been coming down and stabilizing. And as a result of this most recent drop, mortgage rates actually went down. So Mortgage News Daily reported on July 28th, which is the day after the announcement of rates going up, a 0.32% drop in rates. All right. So we went from 5.54 on the 27th of July to 5.22 on the 28th. The 29th rates dropped again on average, 5.13. Again, this is according to Mortgage News Daily's daily survey. August 1st, which was a Monday, 5.05% rates, right? So if you locked a rate over those few days, you got a lot better rate maybe than you've been hearing about recently. Now, they did jump again. So as of today, filming this video, August 2nd, 5.3 was the rates, but still considerably lower than where they were before the announcement. So rates got better, right, which makes housing more affordable. And the S&P 500, right, and other major indexes all jumped too. So the S&P index was down below the 4,000 points, now up above 4,100. So I'll show you this graph here as well. But both had a positive reaction, and a lot of it was because there was consumer confidence that something was being done to get inflation under control. So again, fear is a big thing, and what we've seen in the housing market is a lot of fear. I've mentioned in other videos, and people have commented, "Oh, where are all those buyers, right? Why aren't they buying?" They're afraid. I think, and affordability is another key, right? Can people afford the payments? I would argue that there are some people that can't afford the payments anymore, but a large majority of people can still afford the payments. It comes down to fear. Well, what happens if the market keeps going down? I don't want to buy a property right now and have a bigger payment and also essentially be, laying on a falling sword, beyond the sword or whatever you want to call it. So I think if you're a consumer right now, there's enough fear that you might be inactive, right? Immobile. And that's what fear does to some people. It causes them to pause. And I've mentioned in previous videos, I think there are opportunities already for buyers, and there will be more coming. And those that are willing to act when things aren't good is when you capitalize and get ahead, right? When the stock market's down and you get in, that's when you benefit. When the housing market's down and you get in, you're going to benefit. Of course, long term, you're going to benefit too by consistently investing and being in the markets. But when you take opportunities that come your way when the market's down, that's when you're going to be able to capitalize. So I think one thing that's encouraging as we're kind of wrapping up this video is recently, the last couple of weeks, I've noticed that we've started to see in King and Snohomish County more pending sales all of a sudden. So the past month and a half, 2 months, we've been seeing a lot more listings, fewer sales. Again, to me, pending sales indicate buyers are buying, right? There's more confidence. And if I look at the last week here, I'm actually seeing more price reductions than new listings, all right? So we're still trying to figure out, right? Buyers and sellers are trying to still figure out what the market looks like. And I think sellers really are the ones having the toughest time, right? Adjusting to where buyers' expectations are at this point. But the encouraging part is there are 1,009 pending sales in King and Snohomish County in the last 7 days and 869 new listings. So considerably larger number of houses coming off the market, right? And if that happens for a couple more weeks, we're going to have a lot different discussion in the market update come September, right? Looking back at August numbers, than we are going to most likely in the new update coming out here in the next week. So I think that there is some more confidence in the housing market. I'm seeing that a little bit. Again, listings are selling, right? Sellers are getting their houses into a place where buyers are excited, and it is at a discount for buyers. So the opportunities are already there. But I think as we're talking about the Fed raising the rates and wrapping this up, there is a impact, right, in consumer spending. And the idea is to put the brakes on, but direct relation to the housing market is not there. So again, interest rates got better for mortgages. The stock market got better. Confidence increases. Now, it still remains to be seen whether these interest rate hikes actually help. So in the coming weeks and months, we'll be able to look back and see if that helped. And again, there's new opportunities to react and respond, right? The stock market's going to be the most volatile and respond the quickest. Housing market will respond a lot slower, but we'll be able to continue to follow this. So does this help? I don't know. I hope it does. But in the short term, people think, at least confidence-wise, that it's doing something. Thanks so much for watching this video as we talk about the Fed increasing the rates and how that impacts or affects the Seattle housing market. If you want to see more videos like this where I talk about the Seattle and surrounding area more often, please consider subscribing to my channel. And of course, if you want to talk more about your situation, buying or selling in the area, please feel free to reach out.